On to the first corporate interaction on the show. It was a good quarterly performance from Insecticides India despite a weak environment that we've been talking about globally and in the sector as a whole. Company says that they saw strong revenue growth in the quarter and EBITDA margin stable despite a challenging pricing environment. Rajesh Aggarwal, Managing Director at Insecticides India, joins us now to discuss the outlook and what really went fine this quarter for the company. Mr. Aggarwal, good afternoon. Thank you so much for joining us. Well, in quarter one, you had indicated that you saw price war in the market because of price erosion by Chinese companies in the generic segment. What led to the improvement that we are seeing in quarter two? Is that dumping and that price war over? Will we just see things improving from here on?
Yes, there will be a lot of improvement from here on because the markets have stabilized. And due to the stabilization of the Chinese markets, the prices here in the country have also stabilized. But the major reason of our growth is the success of our strategy, because we had strategized that whatever products which were the old generic products, we were dropping these products as a tail cutting strategy, and we are bringing in the new technology products. So there have been a lot of launches into this fiscal and also in the previous fiscals actually, and we have focused around those products, and our strategy of working around our key products, key molecules has been very, very successful. Like if I talk about Shinva, which is the largest product with us, we are going to touch 100 crores gross sales for this product, and the target is much bigger because we are just the halfway for this product in this year. Along with this, even if I talk about the other products which are the new launches for this year, the product like Mission, that also along with our partners is going to cross 100 crores this year. Tori, again, a big success for us as a brand, and also in the institutional market, we have got a big success with this product. Similarly, Hachiman, Green Label. So I mean to say, a lot of new products have been the focus products for us, and this has become our strategy that we are launching. Even for this Rabi season, we are bringing in new products like we have launched Million, we have launched Opaque, Nakshatra. So different herbicides and different other products are in the pipeline and they are being launched into the market, and we will be focusing around these products, which are definitely going to give the value addition for our customer, the new generation solutions for the farmers, the network, and these are going to add value actually for everybody.
So can we talk about your EBITDA margins? You've said despite a challenging pricing environment, you've managed to hold on to margins. But now it appears that the pricing situation has improved a bit. Even the high-cost inventory has largely been liquidated. So should we expect margin expansion from current levels? Q3 margins, will they be higher than Q2 levels? And is there some sort of a gross margin or EBITDA margin expansion number that you can share with us?
Sharing the number will be very difficult. We'll definitely cross the industry and we'll improve our margins in a big way. Because if we look at the inventory situation, like we have improved the inventory by almost 250 crores in last 6 months. Precisely, it will be 268 crores. We have reduced our inventory. So from 860 or 850 crores, we have come down to sub 600 crores. So all these things are helping. And our inventory days have become better. The return on investments are becoming better. So this will be a continuous improvement which you are going to see quarter on quarter basis. And definitely the margins are going to improve in future because this year there was a lot of load of the old price inventory which was there. And I'm happy that we are able to show the big success in this quarter. But this will be a regular trend which is going to come because one quarter is not going to matter. The important thing is like the Maharatna, our focus product sales, which was around 54% in the previous year, it has come to almost 64%. So there is a big improvement in Maharatna sales, and now the focus is all around these products actually, and we are bringing the new products into this segment regularly. So there will be regular launches. I see half a dozen launches actually into this quarter and the next quarter also, out of which 2-3 products which I named just now, Opaque and Million, they have touched the market, and there are 2 products also.
Mr. Aggarwal, yes, we do get that point. Yes, Mr. Aggarwal, we do get that point. The product launches is something that will be leading to the growth, but we do have more questions on what your growth will look like this year as well. You'd guided for the 12% growth. Will you be able to surpass that considering that you are looking at product launches? And second is, were we seeing the price reduction only in generic products? Was it not coming to branded as well? And is that the reason you're focusing more on these better technology or better branding products right now?
Yes, actually, because the generic products, when I manufacture the technical also, there is heavy competition. And whenever there is a market fluctuation, they were creating a trouble for us actually. Like we had to hold the inventories, sometimes the high price inventories, and they were getting worst impacted. So in the technical manufacturing part also, we have dropped about 6 products, and we are going to introduce 6 more in the technical manufacturing field. And that is going to start soon, and that will convert into brands also. So the idea is, as we are improving our strategy from the, I would say, red ocean, we are trying to move towards the blue ocean.
Okay. So just to, end the discussion, your FY24 revenue guidance was 12%. In the first half, you've done 17%. So what could the full year top line growth look like?
I think we should be able to maintain this number, and we should be able to grow even better into the second half.
So maintain 17% growth in the second half also? Or
I don't want to give the number, but yes, we should be able to better our performance in the second half, both in top line and bottom line, in terms of percentages also.
Okay, take that point, Mr. Aggarwal. Thank you so much for joining us and giving us all those details. You know, Reema, this is one company, Insecticides, and the other one is BASF, which just reported numbers a while back that have done well in an environment which has been challenging for other agrochemical companies, the way we saw for UPL cutting guidance. But this company is saying they'll go ahead and, exceed that guidance as well. Mostly domestic in nature, but still, we are seeing some improvement coming by as well. We'll do one thing, slip into a short break. When we come back, Subrikant Panda from Indian Metals and Ferroalloys will join us to discuss their Q2 numbers and their business outlook. Stay tuned for that.